Thank you for tuning in to another episode of Kristen's Corner. This is State Senator Kristen Phillips-Hill, and it's an honor to be joined today by my former colleague in the House and my very dear friend from Lebanon County, Representative Frank Ryan. So, Representative Ryan, for our listeners, could you give us a little bit of your background, because it truly is fascinating, and I will say this, in the battles to defend our taxpayers in Harrisburg, having you in those trenches with me was always a good thing.
Well, Senator, I have to tell you, I've been incredibly impressed with having you and your leadership in the House, and now seeing you in the Senate. I think we're in great shape, I really do. But I'm Frank Ryan, as you mentioned. I'm a CPA. I'm a retired Marine Reserve Colonel. I spent 41 years in the Marine Corps. I didn't know I could get out. And I've specialized my entire career in keeping companies out of bankruptcy. So at the tender old age of 66, I decided to run for the legislature. The voters were nice enough to elect me. So hopefully we can keep the Commonwealth out of bankruptcy. I've told everybody we have about 2 to 4 years before we have to make significant financial decisions. The solutions to our financial problems will be so severe if we wait much longer that no one will be able to politically handle those problems. So time's not on our side, and you got that. You were phenomenal to work with in the House, and I know in the Senate we're going to do, it's going to be great things.
Well, we're very grateful that at the tender age of 66, you made that decision to join us here in Harrisburg. So thank you. And now I want to transition to that one issue that you and I could not agree more on, and that's school property tax reform, and more importantly, school property tax elimination. And given your extensive background as a CPA in finance, you have some really interesting ideas of how Pennsylvania could solve this issue. So if you could, walk us through your plan and how we get to the total elimination of school property taxes.
It's absolutely imperative, and I tell you, you've been a tremendous asset in this thing. I went back and looked at House Bill 76. Our bill is going to be called House Bill 13, and it's a 100% elimination of school property taxes on homeowners and businesses. And I think this is one of the critical, I call them a critical success factor to saving the Commonwealth. It's the number one issue we have to deal with. A lot of people are stunned to find out that we have 161,000 property tax liens in the Commonwealth of Pennsylvania. And that's mind-boggling. And this is good economic times. In bad economic times, I'll give you a corollary. Providence, Rhode Island, at the depth of the recession in 2009, had 42% of its properties in foreclosure because of property taxes. And I worked quite a bit with some folks up there, and we were able to craft a plan that I think turned it around. Pennsylvania is going to face the same issue. We're losing about 14,000 homes a year to property tax elimination. But I need to let everybody know, this just doesn't affect seniors. You know, I am a senior at 68 years old now. It's pretty apparent. And if you see my photo, you'll see I am definitely a senior. What happens is that everybody's on a fixed income. You can't go to your employer and say, by the way, my property taxes went up 5%. Could you raise my pay? That's not the way the system works. And unfortunately, school property taxes have been increasing at a geometric rate, and incomes, when they were increasing at all, were going up arithmetically. So the delta between the tax bite for the citizen then 5 years ago versus what it is now is significantly different. So let me give you an example. The percentage of your disposable income that's paid for by property taxes is going up significantly because our pay raises are not keeping pace with the increases in school property taxes. So my House Bill 13, I'm on my 10th revision. I did something, and I'm a supporter of House Bill 76, which is a school property tax elimination as well as a myriad of other property tax bills. The reason I'm opting to go the way we're trying to do on House Bill 13 is that I think it solves the greatest number of problems. So let me give you an example. On my bill, House Bill 13, that you were instrumental in giving me advice on, and I can't thank you enough, the increase in the personal income tax that we're going to put in of 1.85%, that will all be done as a piggyback tax that will stay local. So if you happen to live in Seven Valleys, it will go to Seven Valleys. If it depends upon where you live, and it'll stay there, because I don't want that money going to Harrisburg. And you cautioned me about that in the very beginning. The second issue, we're going to be increasing sales tax from 6 to 7% on existing items. That 1% increase is a piggyback tax that would be staying local. We have a hold harmless commission that says after we've done this, I'm the only person, probably other than you and Seth Grove, that's read all 500 comprehensive annual financial reports for the school districts. For those that don't know what that is, that's a financial statement for school districts. As well managed as most York schools are, with the exception of one or two, not one school district in the Commonwealth of Pennsylvania has a positive fund balance. Now, that doesn't mean they don't have cash. It just means they've got negative, what we would say, equity. So in other words, you have more liabilities than you have assets. And that's dangerous, because that means in the next recession it's going to get worse. So what we've tried to do in this bill is provide as much local tax revenue. My bill also provides a break for renters. So if you're renting and your landlord sees the property tax go away, what will happen in that case is the landlord will disclose 12 months in advance that here's how much we're saving, and then you can negotiate with them. The large multi-state corporations who have rental properties, they all said they would provide a reduction in rent for their tenants. The reason we didn't want to make it mandatory is you have an awful lot of small landlords who didn't pass on the property tax increases when they were going on. They ate it themselves. So we have to have the ability to not disrupt the market. And I think we've accommodated that. We have a hold harmless provision in there, which then says if a school district is shorted, it comes out of this fund. And the other part that I like, we create 2 years in a row, a total $500 million lender of last resort for a school district. So let me give you an example. Say if in York County, a major employer shut down. God forbid, say if something happened to Harley-Davidson, and there was a tornado that hit or whatever, and the plant was shut down for 4 months. That would bankrupt a lot of the schools that depend upon that income in the process. And I'm just giving that as an example. That would obviously never happen. But we have had a school district in another county where the company was sold to an out-of-state entity, and they're talking about moving the entire company out of the Commonwealth. That one school district would lose 100% of its revenue because 70% of the people in the town work for that one company. So we've got a force majeure ability, which basically says you can go there, and under Act 47, the funds are dispersed so that we don't disrupt the schools. The one thing, and you haven't been a former school board member, cautioned me about, and from my experience in doing workouts of financially troubled companies, this is not designed to penalize any school. You'll get the same amount of revenue. What this does is it puts the school district, and the way we've done the transition, so that the school district has the fund balances that they need, I think was well done. So let me give you an example. If you escrow your taxes on your home, you've actually paid your taxes a year in advance. So when you get your school property tax bill in July, that actually covers you through June of next year. And our bill will then eliminate, so if we're successful, and this goes through, this July tax payment will be the last one you get. And then the new tax increase will go into effect on October 1st. So the school district has actually 7 months to build up its cash reserves. And I've worked with the Federal Reserve, the FDIC, Federal Home Loan Bank Board, and other rating agencies, and they said that would work. And what that does is it provides a surplus of funds to the schools so that they're not left being unable to make payroll, which would be harmful to everybody. One last comment, it's not part of this bill, but you again cautioned me, you mentioned to me about the cost of children with special needs. And as you know, that's a passion of mine. I walked across the United States for kids with disabilities. And what our plan does is to have the federal government with these unfunded mandates start to pay what they're supposed to be paying, which is 40%. York County schools get anywhere from 13 to 18% of its budget. York City School gets a little bit higher of a percentage for financial reasons. But basically, York County is underfunded by the federal government by about 22%. And Representative Scott Perry and Congressman Dan Muser from my district are willing to work together. Dan Muser is on the Education Committee to introduce that legislation. We think that will reduce some of the cost drivers and, again, pull some of the pressure off. Then the final issue is pension reform. Senate did a great job, and I was very pleased to see that you helped lead the effort in the House at the time to get past the pension reform, which went into effect on January 1st. Now we have to get the funding alternatives with the Pennsylvania State Employee Retirement System, PESERS, under control so that we, in fact, make sure that the money that it has been invested is invested safely.
you know, you've touched on so many things. I don't think we have enough time to really dig into all of them. I think we're going to have another podcast together to really delve into these issues. And I can tell you there's no issue that is more important to the people that I represent in York County, and I know to the people that you represent in Lebanon County, other than this, eliminating the burdensome school property tax. But, you know, there's a lot of other ideas that are floating around in the House with regard to addressing school property taxes. And we've talked in the past about our uniformity clause in our state constitution that essentially requires all entities to be taxed the same. But in 2017, the voters approved a constitutional amendment that allows primary residential property or homestead property to be treated differently than other property, like commercial properties. And up until that point, if we wanted to eliminate school property taxes, we had to include every property. You know, shopping malls, industrial sites, casinos, everything, because all property had to be treated the same. So in York County, that measure was approved overwhelmingly. 69% of the voters supported it. In your district, I believe in Lebanon County, it was 70%. And I think, you know, my goal has always been complete elimination. But I think, to me, what was so important about that vote was it was really indicative of how Pennsylvanians feel about their school property taxes and that demand for a solution. So, in your opinion, does that help us or does that hurt us by eliminating only school property taxes for homeowners? I mean, my sense has been total elimination, but now we're seeing some options over in the House and here in the Senate for just homeowners.
If you do the homeowners exclusion only, and I'm a homeowner and you are as well, we benefit. The problem that happens, and what I would encourage, I've done turnarounds of financially troubled companies my entire life. That's a solution that is going to create a secondary problem. And here's the secondary problem. Every business group that I've talked to has said, great, you pull yourself out of this and now make me a target. So when I'm going to put a gas generating plant in York County, maybe I'll put it in Maryland instead. Let me just go ahead and start moving my facilities out because now I'm a target. Once you've built your property, be it BMY, a new gas-fired plant, any type of asset that you would build in York County, you will find yourself a target. Spot appeals, you saw that with spot appeals. And if a listener is not aware what that is, that's when the school district can go in and just say, we think your property is worth more, and here's what we're going to do. So I'll give you an example in my community. We had a company called Traditions of Hershey. They take care of elderly people. And elderly people pay the pass-through property tax because it's built into the rate that they charge. And it's all private pay in Traditions of Hershey. The school district filed an appeal asking for another $250,000 per year in property taxes based upon because they had 100% census and they said it was worth more. So they had their independent appraisal. This company spent about $25,000 to $30,000 in terms of defending it. The court ruled that they could increase their property taxes by $120,000. Traditions of Hershey passed that on to all the residents. That's what they do. That's what all business does. And they had 4 members who ran out of funds within the past 12 months earlier. And they then now are working in county assistance to be located in a different facility. The problem that this creates for so many different people is that it creates winners and losers. And so and I would support a homestead exclusion only, but I would tell you it's a bad step because what will happen is you'll start to lose more and more businesses. And the Independent Fiscal Office put out a great report. They do a 5-year forecast, and I know you spend a lot of time with it, and so do I, that they said basically younger people are moving out of the Commonwealth. They're moving out of the Commonwealth because businesses are. And I'll give you an example. In the 1970s, I used to say back in the 70s, and people would look at me and say the 1870s or 1970s. So back in the 1970s, we were home to about 75 Fortune 500 companies. Pennsylvania is now home to 6. They've moved out. And what they've said is we're not worth it here, or they've gone bankrupt. I mean, Pennsylvania Railroad went bankrupt. Bethlehem Steel went bankrupt, and we're gone. but it shows the antiquated nature of some of our tax codes. And that's one of the other things I know you and I are working on, is a complete revamping of the tax code. So a lot of people say, well, I need this or I'm going to go bankrupt. Well, I get that. You may lose your home, and we've got to fix it. But if all of a sudden you find out that the person who's paying the property taxes, the employer, gets moved out of the town, they decide to build their business elsewhere, you'll find that you won't have enough young people here paying the personal income tax. And mark my words, if we do a homestead exclusion only, in 3 to 5 years, we will have to tax retirement income, including Social Security, in order to balance the state's budget and the school district's budget, and that's unacceptable.
I could not have said it better myself. I so appreciate how clearly and succinctly you have laid out exactly what we need to do to move forward. And I am a prime co-sponsor of Senate Bill 76, and whether it's Senate Bill 76, House Bill 13, or any other measure that's going to totally eliminate our property taxes, I'm on board, and I am, again, so exceedingly grateful for your leadership. And I know how incredibly hard that you've worked on this. You know, on average, they say it takes 6 years to get a bill from concept to law. And we've been working on this issue. I've been here since 2015. I've been working on this issue. You joined in 2017. You've been working on it. But in truth, we have had so many colleagues who've come before us who've been working on this going on, over 15 years. And I really believe now is the time, and that we can't afford to put this off any further into the future. And you warn us regularly about where this Commonwealth is going and how essential this reform is to the overall financial health of this Commonwealth. And I am so exceedingly grateful that you were willing to be my special guest here today. Again, Representative Frank Ryan from Lebanon County, a champion for the taxpayer, thank you for joining us on this episode of Kristen's Corner. This is State Senator Kristen Phillips-Hill. Thanks for tuning in. And for more information on this issue or any state-related issue, please visit senatorkristen.com.